Hey guys, Akil Stokes here. Welcome back to another Trading Edge video, your weekly look around the markets. Just wrapped up a busy day of soccer tournaments with the kids, and I came back to record a video for you guys because we have a busy weekend of trading ideas to look at in the market. Now, before we hop into the technicals, just want to give you a little bit of a heads up on what's on the radar as far as the fundamentals go. On Tuesday morning, we have an interest rate decision for the Reserve Bank of Australia, where there is an expected rate cut. Now, just going into this, remember what happened last week with the Bank of England, where we had a rate cut as well, yet we saw a very positive reaction. So if you paid attention to the clues that I told you about in the past Trading Coach podcast, where we explained what happened there may be a similar situation here with Australia. So dig into that if you like, or if you just want to increase your knowledge of how the market doesn't always react the way we would expect to fundamental news. Following that up on Tuesday, we also have CPI or core CPI coming out for the dollar, which is an inflation-related event. And then Thursday, I believe, GDP for the pound and also PPI, another inflation event coming out for the dollar. So pretty steady week of news, not super big things to look for, but certainly things that probably will affect the market. Now, before we hop in, just make sure you hit that like button, subscribe if you're not, that way you don't miss any videos. I did a really cool interactive bar by bar walkthrough on the pound yen this past week, which you guys really seem to enjoy. So if you missed it, do those two things and hopefully you won't miss the next time I do something like that. All right, let's hop in. So we're going to get started here on the euro dollar, and we are in a pretty decent period of consolidation. This is actually going to be called a pennant pattern, where the market puts in a directional move to the upside, and then we start contracting where our highs are getting lower, our lows are getting higher, and eventually we should break out of this pattern. Now, here's the thing. Which direction are we likely to break out of? I don't know. By the way, if you're new, that is okay. There's this idea out there. Someone yelled at me the other day because they asked me for my opinion on a chart, and I was like, I don't know. I've got nothing. The market's leaving more clue or no clues. And I'm like, well, you're a trader, a professional trader. How do you not know? And understand that the majority of time we do analysis, we don't know. I guess technically we never know, but we don't have an idea. It's only when the market is at specific locations and giving us specific clues that we can make those directional predictions. So if you ever analyze a chart and you just don't have a prediction one way or the other, that is 100% okay. And you're probably going to be like that most of the time. What I can tell you is this. We are sandwiched between two pretty decent levels of structure. If I draw a line right here at the top of our pennant and look left, you'll see that it comes to the lower end of this previous consolidative period back in late July. If I draw a line here at the bottom of this pennant, you're going to see it comes really close to the neckline of this previous head and shoulders. So price action is kind of bouncing in between both. Here's what I can tell you. If I bring some volume on, it's going to help us kind of pinpoint some locations. If price is likely to go higher, we're probably likely to go somewhere in this level. And if I had to guess where in this level, I would say about 117.5, 117.50. I'll put a nice little green line there to give you the idea of targets. If price is likely to go lower, then we're likely to go to this level right here. And I would draw a line right in here about 115.80s, that area right in here. So what you can do as a trader is wait for the market to give you a clue of which direction it's likely to break out of. And the clue would be a breakout of this pattern. Now there's three ways we can trade breakouts. This situation is it's going to be more appetizing for those who trade it a very specific way, but I'll kind of break it down simple for you. If we're trading the breakout of the pattern, there's two areas you can look for. You can look for a breakout of the horizontal level of structure, which is going to be the red line here, the high, or the red line here, the low, or you can look for the breakout of the trend line, which are going to be these white marks right in here. Obviously, you can see if you wait for the breakout of the horizontal line, there's going to be a lot less opportunity to trade it from here to here. Now, obviously, we could do this, have a very small breakout, get a pullback, and then continue up there, which would offer more opportunity. But there is an increased likelihood that if we break out, we may just go straight there and the move would be made. And then same thing to the downside. If you wait for the trend line to break out, well, you're obviously going to have a much cheaper price point in which you can get involved in. You have a much better opportunity of kind of waiting for a breakout, a retest, and a move back up, or again, vice versa to the downside. However, the danger with this is that this can easily just form into another period of consolidation, because although we've broken the trend line, right, this can easily morph into like a sideways channel or something like that. My advice is this: in general, when it comes to trading, this shouldn't even be a decision, right? You shouldn't have the decision of whether I wait for the trend line to break or the horizontal level to break. This should be something that is predetermined. As a technical trader, you need to decide, which of these do I value? Do I value trend lines, or do I value horizontal levels of support and resistance? And based on which one you value, that's the one that you're going to wait for in this situation. So cool little discussion here on euro dollar. We'll probably see some of that breakout when the Tuesday CPI comes out. But this is called bracketing the market. You have an idea if we go to the upside, you have an idea if we go to the downside. Now you just wait and wait for the market to show its hand. Next up is going to be the pound dollar. Pound dollar is gently resting at a nice little shelf right here. Again, you can see a little bit of consolidation to end the week. If we look left, structure leaves clues, a very similar level of consolidation right here. This is a trade where I would be waiting for a potential bullish breakout, meaning for price action to break and close, right? That last part's very important, break and close above these highs right here, this green line. And if we can do that, I would expect that we're going to go higher to test our higher level of resistance up here. So simple, wait for a break and close above structure here on pound dollar. And if so, look for a potential bullish continuation trade. Euro yen, very similar to pound dollar, but we have two things happening here. One, we do have price action gently resting right at a previous level of structure resistance. Same type of deal here. I guess three things. Three. I'll mention all three. One, if we break and close above this level, then expect price to continue up. Two places you can shoot for if price continues up. One is going to be, let's just mark it out like this. If price continues up, this is the bigger area in which I would expect price to go to. One, I'm looking at this full consolidative level right in here. Two, if we do rally up, we do have a potential harmonic pattern forming. This is going to be called a Gartley pattern. I will draw it on in a bit. This swing high to swing low is going to be our X to A. This move right here is going to be our A to B. This move down here to failed extension is going to be our B to C. And then a move up to this 127 right here is going to be our D completion point. And for you guys that were in the Q&A session, remember, this is a zone, right? The 127 is the first place we expect price to go to in order to officially complete the Gartley, but it is still valid until we run all the way to the highs. Now, the reason my box is a little bit lower is, again, not taking the Gartley into account, but just the pure structure level. One, this area of consolidation right here, and then two, this 173 even handle. So you can kind of do two things with this. If you're a Gartley trader, you can just wait for the Gartley to form, if it forms, and trade it bearishly if it does. If you do get the break and close above here and an opportunity to trade it long, you can trade it long in advance of that. You can kind of double up, trade it long in advance of that level, stop in reverse, and then get short. And then the last scenario that I just noticed right now is that we may replicate what we did here at the bottom, right? So if I draw some ebbs and flows out, right, you guys should know what this is. If you don't, this is called a head and shoulders pattern, which is a classic reversal pattern. We may be putting in the same thing, right? So if we do end up doing something like this and then breaking this neckline to the downside, that would be a head and shoulders pattern, which would offer its own bearish prediction, but that's something we can revisit if it occurs throughout the week. Speaking of head and shoulders, and I promise I didn't purposely plan this, we have a potential head and shoulders here on the Euro New Zealand. Now, first and foremost, hats off to everyone that made profit on that Cypher. It was a little bit of a rough one. I'll go ahead and draw it out for you. It was our X to A to B, B to C and C to D right up here. And you can see it took you on a little bit of a ride where you entered right around this area. It took you into loss, right? Making you feel sad, right? And then it took you into profit, making you feel happy. Yay. And then just as you felt happy, it took you back into a loss, making you say words that I cannot say on YouTube if I want to keep it clean. And then finally, it actually took you down back into profit, hitting your profit targets down here if you indeed rolled your Fibonacci's with price action. This is the market. I mentioned this before. The market's job is to inflict as much pain on as many people as possible. Patience equals profit. Patience pays. These are the type of yo-yos that successful traders are able to navigate through. These are the type of yo-yos that struggling traders, immature traders, I guess you can say immature from a trading perspective and a trading psychology perspective. These are the ones that they get out for break even or do something dumb and take less profit than they should. So hats off if you are someone that was in this boat of earning this dollar sign face down here. And if you weren't, right, take a picture of this and use it as a lesson, right? I shared with you yesterday the trade review video from the trading battle. And again, do the same thing I did. Go through your trades, analyze your different categories, and write out what you did right, write out what you did wrong, and try to learn from those mistakes. There's nothing wrong with it. We all make mistakes. The goal is to try to make less and less and less as your time goes on as a trader. Now, back to business. Head and shoulders pattern. I just showed you guys how to draw it. I'll do another one because you guys like when I do this in these videos. Speaking of like the video, please. I'm supposed to say that a lot. This is a little bit of awkward one because it's not your traditional head and shoulders, right? It's sort of like this, right? But honestly, this doesn't make any difference. The key that matters, right? And foundation course members, you'll remember me saying this, there's only 3 ways to trade, right? So everything that we do trading wise falls under those 3 ways. All that matters here is if we violate this neckline, the solid white line to the downside, then our expectation is that price is likely to continue lower. Now, here's the interesting part. This one's fun. If we're likely to continue lower, where are we likely to continue lower to? Well, there's not a lot here. And there are different ways you can project head and shoulders patterns. You can take a equal measured move from the head to the neckline and draw it onto the shoulder and make a prediction like that. You can bring a Fibonacci on from that same level, head to neckline, and make a prediction like that. You got an AB equals CD lining up right near a 1618. That's kind of cool. Or you can just look for structure, right? Use that as part of your analysis, but use structure as your analysis as well and say, okay, this is the beginning of the most recent structure level, this inside level right here, and of course going all the way to the downside. Now, that's a big zone, but how can I chop that up? Well, let's bring on some volume. Let's see, is there any volume spikes in this level? And you can see one right around here, right? So right in this zone, I would say, if you're conservative, maybe this AB equals CD pattern right here, 94.37s or even 94.5. If you're a little bit more aggressive, I think you can shoot for the 194 even handle as well. So bearish potential bearish head and shoulders pattern here on Euro New Zealand. Keep an eye on it. Also, real quick before I forget, Jason and myself are hosting another 1-day, 3-hour online trading workshop that's going to be on August 28th. I'll put a link in the description box below where you can read up on all the details, but want to give you guys the early heads up. You guys know that these spots do fill up quickly, and as regular viewers, I wanted you guys to know first. So check it out, sign up before it's full. So as I get better at linking things together, something else that is also full or filled is this potential Cypher pattern on the pound Canada. This could be 4-hour or daily. It's a little bit cleaner to me on the daily, which is why I chose this, but it's going to look like this: swing high to swing low. X2A is going to be our first move. Our second move is going to be this retracement right up here. Our third move is going to be our extension down here. And if price were to rally up to our 786, just like our Gartley pattern earlier, this would be the starting point of the Cypher. And that Cypher would be valid all the way until the X leg here. So again, these are pattern formations that form in periods of consolidation. I bring you consolidation. So check this out here on the daily, or if you can naturally see it on the 4-hour, you can see it on the 4-hour as well. You may get a little bit of a better stop loss there too. Following up on that potential cipher, we had a busted cipher here on the Nikkei. Now, this has been interesting because we've had a few advanced patterns, right? We had a beautiful bat pattern right here that went on to win pretty pain-free and nicely. X to A to B, B to C, and C to D. Kissed it right on the nose, then ran up. That morphed or gave us a cipher second. How can I draw this on without deleting that? Here we go. It's going to look like this. X to A to B, B to C, and a CD completion that was right about here that ended up losing. Now, when you first glance at this, and that was just to show you that patterns form in bunches, right? So when you have the market kind of consolidating, you tend to get different pattern formations forming at the same time. Now, if you're looking at this just from this perspective, you're going to see a higher high, higher close. You're going to say, Akil, I've watched your videos. I know that when I see a higher high, higher close, that tells me that price is likely to go higher. And if price is likely to go higher, then I should be looking to get bullish. Yes and no. Remember, there are different parts of that prediction, right? The first prediction is the directional bias. The second prediction is if I'm likely to go bullish, then where am I likely to go to? And this is where our top-down analysis comes into play. If I go to the daily, and you should be starting on the higher time frame, but I did this purposely to make it a lesson for you, you'll see that although we broke and closed above our previous level of structure to end the week, if I look to the left, you're going to see that there is another level of structure that I ran into right up here. And this is a level that I would expect the market to give us a reaction off of. Now, for my personal trading, I can't do much here because this previous level of structure has to be the target level if I look for any longs here, or any shorts here, excuse me. But it doesn't mean it has to be that for you. And I'm going to give you another level that I would look for. So if you can get a short opportunity, and we can see the market starting to lose a little bit of momentum, obviously we want to wait for a reversal signal in this area. The first place I would expect price to go to is somewhere in this zone right here. A secondary level would be right down here. So again, there is some room if price action were to come here, maybe flirt with the highs a little bit, to trade it back down to here as a TGT1. And then if you're looking for a further move, back down there as well. So two opportunities here on the Nikkei. We'll end things on the Nasdaq this week. We have another advanced pattern formation. This is my favorite advanced pattern formation. It's going to be the bat pattern. Why is it my favorite, you ask? Because it consistently gives me a high entry close to my invalidation point, and it gives me a good risk reward. So once again, drawing it on, advanced pattern formation, bat pattern, X to A, swing high to swing low, A to B, our retracement coming to the 50%, but not to the 618. B to C, our failed extension to the downside, and then our CD completion would be right here at the 886, once again with the zone going from this 886 to the high right here. So this is already at market. Obviously, if you're someone that's waiting for a unique reason for entry, you wait for it in this zone, but a nice potential, or nice, I guess, completed bearish bat here on the Nasdaq. Like this video before you go, hit that subscribe button so you don't miss anything that comes out during the week. And if you have any questions or comments about anything in this video or anything that you ever want me to take a look at, feel free to leave them below. You guys know I read and respond to each and every one of them. I'm going to finish getting caffeinated and try to edit this video and get it out for you. Until next time, plan your trade, trade your plan. Take care. Workshop, August 28th. Sign up before it's filled, because you know we'll close those doors. You know we'll do it.
I want to be the best in the game. Invest in my name. Check no restraints. I'm obsessed with the pain. I ingest, I retain. Assess and I change. Possessed by the thought I'll be free one day from society's restraints. Money, clout, and fame. Mud, disease, a plague. We all love to hate. Have to play the game. Have to make a name. All our insecurities are on display.